You should think of Bitcoin as a coiled spring, ready to explode higher. Bitcoin is often described as going parabolic, and that moment might be coming soon. Technically, Bitcoin is classified as a commodity, and it's been showing divergent strength in today's uncertain markets. When you zoom out, the long-term picture becomes clear. If Bitcoin becomes widely held by governments, corporations, and institutions, it could easily reach parity with gold. Some experts believe this is the beginning of a great financial reset, and Bitcoin is leading the way. Today, you'll hear updated Bitcoin price predictions from 5 major investment voices. Kathie Wood from ARK Invest, Mike McGlone from Bloomberg, Matt Hougan from Bitwise, Anthony Pompliano, and Jay Jacobs from BlackRock. Each of them shares one urgent message: buy Bitcoin before it explodes. Let's begin with Kathie Wood, CEO of ARK Invest. Her team manages over $9 billion. ARK recently released new price targets for Bitcoin by the year 2030. Their bull case is $2.4 million. Their base case is $1.2 million. And their bear case is $500,000.
And then finally, always like to talk about Bitcoin to gold. And again, gold going parabolic did take this ratio down. But you'll notice that it did not break the uptrend that is in place and that we think will remain in place. Bitcoin did act more as a risk-off asset. A risk-on asset in the market's recent correction. It behaved like the NASDAQ, unlike gold. But we believe that it was just correcting to this trend line because the Bitcoin price went up so much more than the gold price last year. So we think that this trend line will continue to move up if we're right that we're moving back into a risk-on environment. Now, the gold, why did gold act as risk-off, but Bitcoin not do so? I just described one reason. Bitcoin was way ahead of the gold price, so that is one reason. But I think the other reason is we weren't in a financial collapse. We were like 08, 09, and the banking system was or the counterparty risk in the banking system was not called into question. So we think the flight to safety into gold was more of a, hey, let's readjust and get this back into some kind of trend line.
Next up, Anthony Pompliano. He compares the price moves of gold and Bitcoin throughout history. He says Bitcoin usually lags behind gold by about 100 days. And right now, gold is up over 20% this year, while Bitcoin is up just 3%.
You should think of Bitcoin as a coiled spring, just ready to explode higher. The harder that gold runs without Bitcoin, the more violent the move in Bitcoin should be 3 to 4 months later. A big reason for this is that Bitcoin is much more sensitive to global liquidity than gold. The digital version of sound money is always going to be the better performer because of the smaller market cap and the larger addressable investor base that is yet to allocate to the asset. So gold has had a great run, but I believe it's Bitcoin's turn to join the party now. The world is adopting a new monetary asset at a time that the global monetary order is being restructured. You literally couldn't draw up a better script for the rise of Bitcoin.
Third, we have Mike McGlone, Bloomberg's senior commodity strategist.
Giving us signals of a great reset. I just went back and compared the best years of gold from the last 100 years. And this morning, gold was ranked 7th. Guess what year was behind? 1934. 1934 is significant because that was the year after we devalued our FDR devalued versus the gold and confiscated a lot of gold. So we're in a very scary area for gold. So this is pretty good resistance, 3,500, pretty good a level to watch for. It could easily drop down to 3,000. But overall, it's a signal that I'm getting from gold is this is the deflation from the inflation we got from the biggest money pump in history to that peak in 2022 in the stock market and things. Now it's all starting to trickle down.
Hey, Mike, we talk a lot about oil. We talk about gold with you. What's the thing in the commodity market that's most on your mind right now?
I don't know if we want to put it in the same category, but technically Bitcoin's classified as a commodity by the CFTC, and that's the one that's really been showing somewhat divergent strength lately.
Yeah, the kids don't talk about Bitcoin as much as they used to.
Oh, they do. No, they totally do.
Okay.
I mean, you just listen to Katie, Tim.
Okay.
They totally talk about
Still
it.
talking
Yeah,
about it.
yeah.
All right.
Is it moving as a safe haven, Mike?
It has been, shockingly, because in my view, it's people claim it's a safe haven, but it trades at much higher volatility than the stock market and gold. But I think what's really kicked in lately is distress in the U.S. bond market. People are saying, okay, if we're having issues with the world's safest securities, mostly long bonds, maybe let's go to Bitcoin. But it's giving us signals of a great reset, the things that some of us wrote about a couple of years ago.
Now to Matt Hougan, Chief Investment Officer at Bitwise, with $12 billion under management. He offers a bold prediction. Bitcoin's market cap could match gold's in just 4 years. That would mean a $1 million Bitcoin by 2029.
We elected a pro-crypto administration in the U.S. We've established a Bitcoin strategic reserve. I think you're going to see governments around the world buying Bitcoin. I think you're going to see institutions buying Bitcoin and corporations buying Bitcoin. And if Bitcoin becomes an asset that's held by governments, by corporations, by institutions, I see no reason why it won't meet parity with gold within the next 4 years. I sort of think we're in this new 4-year or multi-year cycle of government and institutional adoption. And I think the end point of that is parity with gold, and that's $1 million of Bitcoin. If we don't see these entities come into the market, then we won't get there, but I really think we will. And then it will be interesting to see where Bitcoin goes from there. But let's at least get to parity, and then we'll start working on the hard yards.
Finally, let's hear from Jay Jacobs, head of equity ETFs at BlackRock. BlackRock manages over $11 trillion, the largest asset manager on Earth.
We think over the long term, if this is the trajectory of kind of greater uncertainty around the world, that things like gold and things like Bitcoin should continue to go up.
Do you think crypto is now about to decouple from U.S. tech stocks? Many are talking about sell U.S. assets kind of behavior in the global markets. Do you think this is the moment?
Well, crypto over the long run is decoupled from U.S. tech stocks. I think what you have to look at is, are you looking on a short-term basis or are you looking over a longer-term basis? You know, over a short-term basis, you can see all types of different assets have rising correlations to each other. And in fact, if you look at the last few weeks under more market uncertainty, you've seen everything from stocks and bonds to crypto trading with higher correlations. But if you zoom out, you tend to see the kind of longer-term fundamental thesis of something like Bitcoin really drive it to behave differently than traditional assets. You know, the long-term correlation between U.S. stocks and Bitcoin is more like 0.2 or 0.3. It's a lowly correlated asset. And it's because what drives stocks, which tends to be things like higher growth, higher certainty, lower geopolitical risk, many of those things actually are kind of opposite drivers for Bitcoin. Bitcoin thrives when you have more uncertainty and are looking for something that's going to behave differently. So fundamentally, this should behave like an uncorrelated asset. And I think as we continue to see more time play out in this uncertain environment, you will see a dispersion between these assets.
All 5 of these investing experts agree. Bitcoin is a coiled spring, and it's about to explode higher. Smash the like button, support the channel, and share this video with someone who's watching Bitcoin closely. This could be the beginning of something big.